Thank you, Joanna, and a very good morning. I'm glad you introduced what AdEx Benchmark is. That shaves you a few minutes off my presentation because there are 40-something slides. There's so much to talk about, and they are really still warm to the touch, the slides, finished just in the early hours of the day. It's always a massive Lego puzzle to get all the data together. So we've done this study since 2006, so we have a long history of what happened in Europe in digital advertising. And I think we all know that the last 3 years were particularly difficult and daunting and without precedent. A major pandemic, a war raging in Europe, and that also, of course, affects advertising. Usually we just start with a slide of all the markets involved in our study. But something significant happened. Our IAB family, our IAB Europe family, has changed in the last year. So these were the markets we had last year in AdEx, and this family has changed. We have lost 2 markets, Belarus and Russia, which we are now excluding from the study, but I'm extremely pleased to, at the same time, welcome 3 more markets. Estonia, Latvia, and Lithuania, something, as I see Mindaugas from IB Baltics in the audience, we've been working on for more than 5 years to get ad spend numbers for the Baltics, a major digital hub in Europe. So what does that mean if we change the composition of countries through our time? Well, we're gaining something. This is the 2021 data from the Baltics. We're gaining around 340 million, but we're losing, of course, something, around 5 billion from the market, Russia and Belarus, but I'm very confident we're going to make up for that gap in no time. So it's a 5% net reduction in the market, but I think history is on the side of those who want to grow this industry together. There's a different spectre going on, not just war and geopolitics, but of course the spectre of inflation. So we need to get a little bit technical before we can delve into the numbers, because that's really important to understand, to interpret what we're seeing. I know it's not as bad as this. This was in a Berlin bank in October 1923, where they were just dishing out the money to be used in the day. They were later being used as wallpaper in flats. They were not in hyperinflation, but it's the first time that we're conducting an understanding of growth and size of digital advertising at a time where we are in a high period of inflation. So you can see the history here from Jan 97 up until 2022, and you can see this major jump here. So inflation in Jan 2021 started to move from negative to positive, and then we had this skyrocketing growth. And of course, we've markets in many, many different currencies involved in here. So we need to be very cautious about what exchange rates we're using and how we're putting this together to provide you with an accurate picture of the market. Right? And we can see the annualized inflation here on the lines. It doesn't affect all markets equally, but some of the key markets, Turkey, Ukraine, but then also some of the larger markets, Czech Republic, Poland, and so forth, are markets that saw higher inflation than Europe on average. And in particular, Turkey acts as an outlier here. So we've previously, to keep comparisons, we always wanted to say we want to keep what the local markets report as growth rates, to reflect the pulse of the local market. So we exchanged this in constant euros, where the exchange rate was the same for one year or the other to keep the local growth. But we did that on the euro exchange rate of 2015. So if we kept with that, the market growth that we depict would be quite strange. So we need to correct things, right? And we're switching now to 2022 currency, meaning that for some markets here we have a downward correction. For instance, if you look at Hungary, Ukraine, and Turkey, we're correcting the market size to something that is actually the state of today and not overly inflated. Upward and downward corrections taking place. With this technical preamble, let's dive into the markets. What happened in 2022 in Europe? Now, drumroll, I stood exactly on this stage last year and gave a prediction. Pretty daunting things to do in those uncertain times. We said boldly the European digital ad market, excluding Belarus and Russia, would grow by 10.1%. Now, I was pretty wrong on the growth outside, the growth including Russia. If we trust the Russian numbers, that is, I think statistics are also propaganda. The Russian market footnote apparently declined by only 2%. So growth including Russia would have been higher. And maybe there's some inflation going on and it's pure luck, but I'm very pleased to see that we were pretty much on point. 9.8% growth digital advertising delivered in this new European family in 2022. That is a high growth given these macroeconomic headwinds, the geopolitical concerns, but also these really tough comparison effects we had from the 2021 ad spend bonanza, where the market, as a reminder, grew by 30.5%. Right? In this environment, to grow by 9.8% is quite extraordinary. But of course, there's a spoiler. That spoiler is inflation. On the one hand, inflation is actually great for advertising, contrary to popular belief, because advertising is allocated often as a share of a company's revenue. And when companies pass on high prices to consumers, revenue grows. We saw that a lot with CPG companies in 2022, and that also means high inflation means there's just more money available for advertising. But of course, it also creates concerns about how much price increases consumers can satisfy and how businesses are going to thrive. So it's not just one, but there are three realities how we can interpret those numbers. On the very left is the growth that we report in the new currency. Then we can adjust for core inflation, which is the underlying long-term inflation, and then we can adjust for so-called headline consumer price inflation, which also includes extremely volatile items like food and energy. And typically, an economist would say, well, advertising is sailing more on a long-term path, not really so much concerned with short-term things. But given that our current crisis is very much about food prices and very much about energy prices, we need to take this adjustment here seriously. So in the worst case, the market in real terms actually only grow by 0.7%, right? But money is money, and the 9.8% is real, so we are sticking with that just as a disclaimer. What does that mean? That means the market is worth 86 billion euros this year. It's a large size of the market. We are reaching the 100. I think it is the GDP of Luxembourg. The GDP of Bulgaria is kind of equivalent to this figure. So we're having now a country-sized industry. And despite this 2021 massive surge that I mentioned, we still managed to add 7.7 billion euros net new into the market. Clearly, that some was a redistribution from other media. I'll come to that in a second. But there's also net new money coming in. We have a session later on about retail media, which is one of the avenues where previously budget that didn't even exist in the realm of advertising overall is suddenly moving into digital. So the pool of advertisers and the pools of budget continues to expand. How are we situated when we compare ourselves to our friends across the Atlantic? Well, the US clearly is larger, but it's also one coherent market. Whereas, although we have a larger population, we still have fragmented markets that are operating nationally, individually, and which is why it's so important. We have this IAB Europe forum to create more of a pan-European digital ad ecosystem. But it's remarkable that the growth is quite similar, considering the particular headwinds that we had to face. Now the question is, can this growth persist? And how does this growth relate to other media? Let's do a little history of digital advertising. On the x-axis here, you can see digital advertising's share of the all media advertising budgets, growing every year. So this is a time series. We're now standing at around 62%. And on the y-axis up here is a measure of how much faster did digital advertising grow in a given year compared to non-digital media. You can clearly see this, these four acts of digital advertising growth. The nascent period where it was growing because it was very immature. Then we had the established period where lots of things happened. The rise of programmatic, the rise of social, video, moving away from performance to more branding. Then we got this outlier years, and it's actually quite stable outperformance there. Then this outperformance during the pandemic, and of course now a downward correction, where we are still growing, of course, but growing not as strong anymore compared to other media. But of course we are now a very mature medium. The thing is, if we average things out, do a 4-year average from 2009 now to the end of 2022, we can see actually there is a corrective factor going on here due to this pandemic boom, and we're still on the same line of outperformance as in the established period. So maybe we haven't left it yet, although we're commanding nearly 2/3 of overall ad budgets. 86 billion euros. How does this distribute across markets? Now, it's still skewed towards very few markets within our family of 27. 3 markets make nearly 60% of the budget, and 15 markets make 95% of the budget. We have some higher population markets here in the longer tail, so there is, as the economy overall grows in those markets, potential for more digital advertising growth to come in. And actually, most markets showed quite robust growth despite the weak macro environment that we saw. So here we have ranked it from the top market to the least growing one. And it's quite remarkable with this framed by 2 outliers. Turkey, yes, strong growth, strong population growth, young population, very digital focus, but also inflation. And then we have Ukraine with the war. It's quite remarkable that we only see a 20% decline despite what was going on in the market. And I think Anastasia is probably going to share something about that. We see some markets here, large markets that were a performance drag. Germany, only 2% growth, but it's not the last one, so it's better than Eurovision, if that's a consolation to myself and my German friends here. Now, if we apply to this growth to adjust it for consumer price inflation, we can see that some markets didn't actually grow. Right? It's not that one picture is the truth and the other isn't. We just have to see it as a corrective picture. That if we remove inflation, some markets didn't grow and saw a slight contraction. Which also says if we want to measure the true performance of digital advertising, we need to do 2 things. We need to, I think, go pre-pandemic, 2009, and then also to remove inflation. So if we do those 2 things, we can see the real growth, the compound annual, the average growth annualized over those now 3 years, and we can see this is the corrected growth. If there was no inflation, and if we balance out for the pandemic, we can see how markets really grew and where growth is coming from. One of my favorite slides every time is let's piece all these things together and understand on a larger canvas how these different markets performed and what they stand for. X-axis, sign of ad market maturity, ad spend per capita. Y-axis, the growth, the dynamism of the market. Size of the bubble is the size of the market. Clearly, there's a few things. UK is an outlier, even though we have a more realistic exchange rate right now. We're seeing some very mature Nordic markets and just high wealth markets also performing well. We see some outperformance in the emerging economies, more markets here above the dotted line, which is the European average growth, but also something remarkable that's reoccurring every year. We see some of the largest economies and most vibrant advertising markets overall in Europe. Germany, France, Spain, and Italy. The big 4 outside of the UK, who are growing below European average and who are also, from an ad spend per capita perspective, not as mature as they could be. So if more budgets move here to digital in those markets, our overall European digital ad economy will become majorly unlocked. And I think a key for that in here is not just in retail media, but predominantly in CTV, as those are quite some TV-centric markets. So once that's unlocked, we're going to see more spend actually flowing from those markets into digital. With this macro picture completed, let's dive into the formats. What's going on the micro level? How did different formats grow, and how did this vary by country? Here's our top-line view of the different formats. Display, for us, total display includes banners, also audio and video, and also social. We lump this together, and we have a breakout here, then search and classifieds and directories. So nearly half the market is display. But the interesting thing is, and then search is still very strong, but the interesting thing is that changing dynamics. In the last 5 years or so, we've seen the share of display grow progressively. This is not the case anymore. If we look at growth in the formats, display overall grew less than search. So search is clawing back some share. There are 2 reasons behind that. There is the overall performance nature, switch on, switch off nature of search, very well calibrated to a recession. We saw the same in the Lehman crisis. And also we see the nature of search changing towards away from horizontal search to product search, e-com, retail, more vertical search. So structural change in the search market is fueling this as well. And remarkably, we can see for the first time, social, which was a major growth engine of past years, is growing less than other formats. Most markets actually saw single to low double-digit growth, again, framed by those extremes, and 12 out of 29 markets in the display category, that is, grew above the European average. If we dive deeper into display, I mentioned the search performance was lagging behind, and we can see the evolution of that. So here we have 4 years, actually, of search growth, 4 years of growth across different formats, including social. And you can see, during its peak time in 2020, search was outperforming the other market bits by the factor of 2.6x. Now it's 0.7x, so it's no outperformance, but an underperformance. This is, I think, a signal of a structural change in the ad market, where we see an overall saturation of addressable audiences, ad loads, etc. In social, we're seeing possibly a bit the impact of ATT, but also we're seeing heightened competition, in particular in shift to video, where there's lots of redistribution of budgets going on. But aggregates often obscure the truth. So individual factors actually have an outsized drag on overall social growth. Because you can see there are many markets here where social still grew above European average. The UK, we know, is the largest European market, and social here is a highly mature category, and it only grew by 3.5%, which means that 35% of the overall size of the social market grew by half than the European average. This places a key drag on the overall numbers. So it doesn't mean it's lights out for social. Overall, if we go into display, a total display including social and non-social, we can see that video grew stronger than non-video. No surprise here. However, if we dive deeper into subsets of that, let's go into social, for instance, we can see actually video growth was so strong that it actually displaced the non-video bit. The non-video bit of social is declining. We see new formats coming in, new platforms, high competition between different ad formats, and also the rise, of course, of shoppable ads through video tying to commerce, which is fueling this. Now, we typically would expect that the same story would hold true in the rest of display outside. That's strange. What's behind that? I think partly it's a comparison effect. Video grew extremely strong outside of social in 2021, and we're not counting YouTube as video. So you go through the corporate filings, Google, you can see in US dollars, YouTube grew by 1.4% in 2022, whereas it grew by 45.9% in 2021. So there is some effect going on here. And yet again, it doesn't mean that video isn't performing, because there's lots of nuance in the local markets. Nearly half of markets grew video strongly above the European average. And there are, of course, pockets, things in video that are growing extremely fast. We don't have the size yet, but we're at 6 markets now for the first time that report the growth on CTV. We're an industry association, so we can't just throw out numbers like an analyst house. We need to be very cautious what we put out. We are not confident yet because we haven't cleaned up this data. I just want to show you that there is now tremendous growth happening in the CTV category, however it is defined. For many years, it was that Europe was lagging behind this, mainly a US phenomenon. Others said it's a PR bluff. It's increasingly becoming a reality. And I think someone agrees with me here on the speaker. Right, I'm sure that's going to be switched off shortly. So CTV is arriving in Europe, and we see markets typically have large markets, a market size that is excluding YouTube of around 300 to 400 million of spend. Another thing that has been growing massively strongly from a small base is digital audio. I showed briefly some numbers on this, but skipped over them. And again, we have a bubble chart here. So we have audio share of display on the x-axis, and then we have the audio ad spend growth on the y-axis. Strong growth happening in audio, 22.3% on a European average, and we can see the share of display that's excluding social, so a relevant share. It's actually quite high in markets that haven't featured at the top of the list previously. Look at Ireland and Belgium, traditionally extremely radio-driven markets where radio played a key role. and I was in Dublin just last week, and we really saw the heightened interest in audio that was available in that market. So strong growth here, also Germany, Sweden, Spain, our host country, performing very well here in terms of the maturity of audio, whereas the Eastern European markets are lagging slightly behind. How are we transacting all of this stuff? Well, programmatically, at least in part. Programmatic is on a slope, and I show you that here, the headline numbers. Excluding social, programmatic had a value of around 12 billion in Europe, 13.9% growth, so above the average. Nearly 60% of display is now programmatic, and there's now more video programmatic in the market than display programmatic, showing that it really becomes part of transacting all media and isn't mainly a performance bottom of the funnel channel. But if we crunch the data, and this took a lot of time to do because different markets report programmatic differently, we can see this slope here. Very, very different levels of programmatic maturity across the European markets. But this isn't a good or bad situation. Lower share of programmatic doesn't mean that the market is, in a sense, immature. In a sense, markets with strong publishers and strong direct sales also say something about the vibrancy and the resilience of their media brands. And here, programmatic adoption is in some parts slower. Quickly to conclude, when we look at search overall, I already mentioned it, high growth here above the average, benefits from key structural changes in the ad market. We can see the distribution here. And then classifieds and directories, a market that we still publish, which is around only 5 billion, but massive consolidation happening here, becoming more pan-European groups coming in. Increasingly, they're shifting ad budgets from listing fees to programmatic and display. So this is why this market is slower, but we see more declines in here. Lastly, before we go into the panel, an outlook. What's going to happen in 2023, and will I be right or wrong again? We're expecting now 4.8% growth for 2023, something that I wouldn't have said last year, given the situation. But we have had a better than expected start, in particular in the EU economy. Consumer confidence is growing. The perception of things getting better is there. And we can see this in the latest economic data. Of course, Q1 2023 was a bloodbath for many media companies, digital and non-digital. But we're now seeing that this was likely the worst quarter of 2023, and we're going to see a progressive improvement throughout the year, in particular with very, very tough, again, comparatives with the first quarter of 2022, and those comparatives are going to ease across the year. So it's a mixture of real improvement and just relative improvement, which will propel the market to continued growth. And here's fingers crossed that if I factor out inflation next year, that this number will stand above zero. And with that, thank you very much. And back to Joanna.